Hello and welcome. You're watching Market Cafe with me, Ankita, and with me is my co-anchor Snehi Shah. So Snehi, it's Friday today, last day of the week. Yes, finally. And this is the show where we get you all the roundup of how the global markets moved, the news that made headlines overnight, and the movers for the market for today's trade session. So first up, Snehi, tell us how the US markets faring. An important key number came out yesterday, PPI data. That also had a bearing on the market. Tell us what happened yesterday.
Absolutely. So good morning to you, Ankita, and good morning to all our viewers as well. Now, on the back of the PPI data, the stock market on the US stock market was largely on the green, and it was the fourth consecutive day of gains for the major averages. Now, the PPI, which is the Producer Price Index, it measures what wholesalers pay for goods, and that number rose by 0.1% in June versus the Dow Jones estimate of 0.2%. And core PPI, which strips out volatile food and energy prices, climbed 0.1%, also came in lower than expectations. So on the back of this, the S&P 500 climbed almost 0.8%, and the Nasdaq Composite advanced 1.58%, lifted by Nvidia and Alphabet, and the Dow also added 47 points, or roughly 0.1% in gains. Thursday was the fourth consecutive day of gains for the major averages and marked the highest close for Nasdaq and S&P 500 since April 2022. And on a weekly basis also, the three major averages are well on their way to gains. The S&P 500 is up 2.5% for the week, while the Dow is up 1.9%. The Nasdaq Composite is the outperformer, leaping 3.5% and on pace for its best week since March 17. Now, on the earnings front also, you've got big financial names such as JP Morgan, Wells Fargo, Citi, BlackRock and State Street that are all scheduled to report their second quarter numbers earlier Friday morning, and United Health will also give its quarterly update. So this is what the US markets looked in, a positive handover coming in from there. Shifting focus to European stock markets, then they closed higher Thursday after another cooler than expected US inflation reading and a dip in UK gross domestic product came in. The pan-European stock 600 closed up 0.6%, with tech stocks up 1.7%, and the majority of sectors ending the sessions in the green. Now, the UK economy contracted 0.1%, so just 0.1% in May, official figures showed, though this was less than the 0.3 month-on-month contraction forecast in a Reuters poll of economists. It comes amid intense focus on the country's ongoing inflation battle, particularly after this week's strong wage growth data. So positive numbers coming in from the UK as well as the US. The US PPI numbers lower than expected, so that's always a positive. With this, the global handover looking largely positive, Ankita.
Right, Snehi, and so is the crude actually. The crude prices have hit nearly 3-month high yesterday. Now, oil prices rose 1% yesterday to their highest in the 3 months after US inflation data suggested that the interest rates in the US were close to their peak. Now, oil prices have rallied by over 11% in the last 2 weeks, primarily in response to the supply cuts from top producers, Saudi Arabia and Russia. Now remember, earlier on also OPEC Plus had given a supply cut of 1 million barrels a day. Now that has moved up to 5 million barrels a day. Now the other thing that is really aiding the crude prices is the softening of the dollar index, which fell to its lowest in more than a year. Now remember that the relationship between oil and the US dollar is often negative, meaning that a strengthening of the dollar typically results in a decrease of oil prices and vice versa. So two things aiding the crude here: the dollar index softening and also the supply cuts that are coming in from Russia and OPEC Plus. The dollar index is currently at 99.78, and we did see Brent crude breach that $80 mark a barrel on Wednesday. Currently, the Brent crude stands at $81.53 a barrel, and WTI is at $77.12 a barrel. So that's where the crude is at. Now, moving on, the energy watchdog IEA has gone ahead and cut its oil demand growth forecast for the first time this year, citing a worsening economic outlook that weighs especially heavy on wealthy countries. Now, the forecast now suggests that demand is set to go up by 2.2 million barrels per day this year to clock an average of 102.1 million barrels a day. Now, IEA also said that it is China that is set to account for as much as 70% of the demand growth. Now, to discuss the trajectory of oil prices, we spoke to G. Chandrasekhar, who's the commodity and policy expert. Here's what he shared.
Yes, I think it's a fairly volatile situation, but some signals are absolutely clear. Number one, yesterday, Brent crude broke above the psychological $80 a barrel. Okay. And the wider expectation supported by the International Energy Agency and the OPEC is that there will be supply tightness. There exists a supply tightness now, but that will worsen as we go into Q3 and Q4. Okay, in fact, the IEA has forecast 2 million barrels per day deficit towards the end of the year, that's say Q4. They have now slightly reduced that deficit, but yet I think the deficit is fairly large. That's number one. Number two, the Asian appetite for energy products, particularly crude oil, is absolutely robust, absolutely ravenous. And China is going to be the driver of demand, followed by India, of course, quite closely. And very interestingly, both China and India are very large buyers of Russian crude oil. But more important, there are two other factors which are working. One is the expectation that the US Federal Reserve is possibly coming close to the rate hike cycle. Maybe there could be one more rate hike this month, end of this month. And beyond that, there's an expectation in the market that there may not be any more rate hikes. This is something which is quite bullish for energy products.
All right, with that, let me take you through all the important cues that you should be keeping on your radar this Friday morning. So you've got the India trade balance numbers coming in and also the wholesale prices numbers coming in. So keep an eye out on these macro numbers coming in. On the quarter one earnings, you've also got Just Dial, Bandhan Bank as well as JSW Energy declaring their quarter one numbers. On the annual general meeting front, all eyes will be on Escorts Kubota as they will be conducting their AGM today. Let's shift focus to corporate action then, and HZL and Rane Breaking. Today is the last day to be eligible for dividend for these stocks, and Happiest Minds also will be having a fundraising committee meeting today, so that's on their agenda today. On the IPO action front, you've got Utkarsh Small Finance Bank. It's the last day to subscribe for this IPO. IPO subscription will be closing today. And on the other events, all eyes will be on the moon mission today as Chandrayaan 3 is all set to launch today afternoon, and G20 finance ministers and central bank governors will also be meeting today. So keep an eye out on all these important cues to watch out for.
All right, then let's move on to news that came in from the global front. Now, global entertainment giant Disney chief Bob Iger says that they are open to selling companies' linear TV assets amid concerns around the media industry's transition to streaming and digital offerings. In the latest move, the company is moderating pace when it comes to moves for its Marvel and Lucasfilm franchises. Decision comes as Disney looks to take up cost-cutting.
Alright, moving on then. China steps up its AI regulations, releasing guidelines for generative artificial intelligence services. Announcements mark the first major move to regulate the advanced technology, and among the 24 provisions are requirements for platform providers to carry out a security review and register their services with the government. The finalized guidelines also state that offshore providers of generative AI tools, if they are aimed at Chinese residents, must also comply with the set of rules.
And in some interesting news, the WHO has classified soda sweetener aspartame as a possible carcinogen. The organization, however, said that this is based on limited evidence and more research is required. WHO's Cancer Research Agency found a possible link between the sweetener and liver cancer. The FDA of the US, however, disagrees with the classification. The soda sweetener is used in drinks such as Diet Coke and Pepsi Zero Sugar.
Alright, moving on then, the valuation of Elon Musk's SpaceX hovered the $150 billion mark following a share sale by existing investors. Company has an agreement with new and existing investors to sell up to $750 million in stock from insiders at $81 a share.
And well, a team of ISRO scientists have travelled to Tirupati with a mini model of Chandrayaan 3 to offer prayers. The countdown for the launch has begun. The launch is scheduled at 2:35 p.m. today. But how will we make it to the moon? Here's an explainer.
Now, India is all set to make that giant leap in space with its Chandrayaan-3 moon mission. It's going to be ISRO's second attempt at soft landing on the moon after Chandrayaan-2 failed to execute a soft landing. Chandrayaan-3 is going to lift off from the iconic Satish Dhawan Space Center in Sriharikota. This Chandrayaan-3 that we're talking about is going to reach the lunar orbit almost a month after its launch, and its lander, which is called Vikram, and its rover, called Pragyan, are likely to land on the moon on the 23rd of August. It's been built at a budget of 615 crore rupees, which really means, and this is for perspective, that it is actually cheaper than the recent Bollywood movie Adipurush, which was made at a budget of 700 crore rupees. At the heart of the Chandrayaan-3 mission is ISRO's ambition to demonstrate end-to-end capability in safe landing and roving on the lunar surface. And if everything goes well, Chandrayaan-3 is going to become the world's first mission to soft land near the lunar South Pole. The propulsion module is going to carry the lander and the rover configuration until 100 kilometers of the lunar orbit, and the payload will study spectral and polarimetric measurements of Earth from the lunar orbit. There are three main objectives of this Chandrayaan-3 mission. The first one is to demonstrate safe and soft landing on the lunar surface. The second is to demonstrate roving on the moon's surface. And the third is to conduct scientific experiments. ISRO's much reliable GSLV Mark III rocket is going to be carrying the Chandrayaan-3 into space. Notably, the GSLV Mark III that we're talking about, it's the largest, it's the heaviest rocket in India's fleet, and it has been associated with several successful space missions. The most important component of this mission, of course, is going to be the successful soft landing of the Vikram lander. Named after the noted Indian space scientist Vikram Sarabhai, this lander weighs about 1,752 kilograms. It's almost the size of a small car. And interestingly, it is 280 kilograms heavier than its predecessor that failed to execute that soft landing. The additional weight is on the part of the lander's legs, which have been strengthened to absorb this mechanical shock which would take place during touchdown on the moon's surface. All eyes, of course, now on ISRO and the Satish Dhawan Space Center as the final countdown begins.
All right, thanks Vikram for that explainer. Interesting to note that the entire moon mission's budget is lower than that of Adipurush. Very interesting take coming in there. But ISRO chief S. Somnath spoke to Times Network on this historic launch. Let's listen in to what he had to say about it.
Essentially, the same three constituent elements of the Chandrayaan-3, like the orbiter, which is now called the propulsion module, the lander, and the rover, are still there. The orbiter part is not having any significant payloads like last time. Its primary job being take the lander and the rover to a 100-kilometer orbit around the moon after the injection to the Earth orbit. This time the propulsion module is not improved. We removed the payload elements and it is given task only to do the function of reaching it up to the moon. And the second part is the the lander is now heavier by almost 200 kilogram plus. What we did is there are many more changes done in the lander, primarily to handle higher velocities of landing. It has new sensors which will take care of the sensor failures if at all it happens. It has new algorithms and software sitting there which are made wider to handle. Its control and guidance algorithms and softwares have been modified and capable of handling multiple paths of travel to reach the land. Landing spot is also almost the same because it is almost 70 degrees to the South Pole, and this location has been selected last time also, where there is sufficient illumination of the sun, but it is closer to the South Pole where we have more scientific interest, because the equatorial region, which is very safe for landing, which is enough solar power and the risks are lower, has already been surveyed and a lot of scientific data is already available. So if at all we have to make a very significant scientific outcome out of this mission, it is better to go to the pole. And why? That's why we selected a place closer to the pole, but it has higher risks of landing safely.
Well, very interesting take coming in there. The budget of Chandrayaan-3 is less than Adipurush, but here's hoping that the landing is smoother than what Adipurush landed with the audience. Well, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we go domestic.
Hi there, welcome back. You're watching Market Cafe on ET Now. Let's move on with some major earnings that came yesterday, and tech major Wipro has reported profit of 2,870 crore for the first quarter, which is below analyst expectations. Meanwhile, revenue and margin have come in line with analyst expectations. Now, large deal bookings growth is seen at 9% for a year-on-year basis, which is highest in the last 8 quarters. My colleague Anisha Jain, who tracks the sector closely, is here with all the number crunching. Anisha?
Well, yes, Wipro reported an inline set of numbers to begin with. At least on the top line, the IT service revenue in dollar terms came in at around $2,778 million, bang in line with our expectation. Even if you look at the margin profile, it came in at 16%. We were working with an expectation of 15.9%. However, on the bottom line, there seems to be a bit of a miss, so we'll have to get more details as far as the bottom line miss is concerned. In terms of the other internals, attrition has slowed down, so that's a positive news. However, if you look at the deal bookings, that's come down to around $3.7 billion, and that compares with over 4.2, 4.3 that the company reported in the last quarter. So there's a bit of a slip when it comes to the deal bookings as well. In terms of the guidance for Q2, they're talking about -2 to +1% kind of growth range. What we were expecting was -1 to +1. So yes, there's a bit of a room of disappointment on the downside going forward. And especially given the fact that this quarter the company reported a sequential decline in constant currency of 2.8%, which is towards the lower end of what the company guided for. There is a bit of disappointment on the top line, but given the fact that it's largely in line, it's not a very bad set of numbers coming in. My guess it will be taken well by the street. Let's see what the management has to say and how the stock reacts. But for now, looks like a largely in line to a slightly muted set coming in from Wipro.
All right, then it's a largely in line and largely muted set coming in there from Wipro. Let's go across to the management. What the management really has to say about the demand environment that has changed over the last 3 months.
The reality is that the market, the way we saw it about 3 months ago, is actually hasn't changed dramatically. It continues to be a market where, there's demand. There are deals in the market. We are closing more deals than we typically would have closed some years ago. We are closing large deals, and at the same time, the volume of discretionary spend has reduced. And I think we see that across industries. There are some industries that are, certainly more exposed, and those industries, whether it's banking, financial services, technology, where obviously spend has been very high for, several years, and communications. In some other industries, we see more demand, less reduction of the spend, in industries such as healthcare or energy and utilities. So that's what we are seeing. So to your point, that the market is basically how we've seen it for the last 2 quarters.
All right, that's the word coming in from the management of Wipro. But as IT companies continue to deliver their Q1 earnings, ISG has come out with its Q2 for the calendar year 23 expectations from the sector. Ashesha joins in with all the details. Good morning, Ashesha.
Well, yes, IT earnings have started coming through, and ISG meanwhile has come out with a report on its takeaways on the deal environment that we are seeing at this juncture, where they say that managed services deal flows continues to remain robust as we saw in the quarter gone by. As far as overall ACV environment is concerned, that remained muted on a quarter-on-quarter basis. We did see a decline of about 4.6%. This was dragged by SaaS, which saw a decline of 8.5% on a sequential basis. They've maintained their managed services guidance of calendar year 23 at about 5% on a year-on-year basis, but they've cut their guidance for SaaS, which was 15% on a year-on-year basis earlier, and now the guidance has been cut to 11.5% growth on a year-on-year basis. As far as decision making is concerned, they say that we are seeing uncertainty as far as the decision making environment is concerned, and that is expected to impact deal momentum going forward. They see clients as more receptive to managed services deals that feature cost optimization, efficiency gains, and vendor consolidation. This is was derived from the results of IT companies that were declared in the past couple of quarters. As far as segment-wise and geography-wise performance is concerned, they say US continues to remain weak because of BFSI segment, while Europe continues to remain strong, especially the UK segment. ISG expects good recovery in the second half of calendar year 23. And they say that weakness in BFSI segment is expected to, reverse in the second half of the year. ISG expects new scope work to rebound in the second half, which will be a positive for the industry. So all in all, managed services guidance has been retained, but SaaS guidance for the calendar year 2023 has been cut by ISG.
That was the note coming in from ISG on all the IT majors. But we'll slip into a short break. Don't go anywhere. After the break, we get you all the stock-specific action. Welcome back. You're watching Market Cafe. Now, before we begin with the rest of the news flow, let's quickly take you through what's lined up on the market. At 8:30 a.m., we have the new BSE's MD and CEO, Sundararaman Ramamurthy. At 9:20 a.m., we have Ashish Gupta of Axis Mutual Fund on his account of the street. At 9:40, we have Saurabh Chawla of GMR Group on the smart metering boom. At 9:50, we have a Rohan Verma of MapMy India on the space industry that is soaring currently. At 10 a.m., we have Pranav Gundalpale of Sanford Bernstein with his eyes on the bank's Q1 earnings. And also we have Suvankar Sen from Senco Gold at 10:30 on the listing of Senco Gold today.
Alright, so that's the power pack lineup we have for you on the market today. Stay tuned to ET Now. But with the GIFT Nifty indicating a rather flatter start to the day, then my colleague Ashesha is joining in with all the important stocks that you should be keeping on your radar today. Ashesha?
Well, yes, first up, Patanjali Foods will be in focus for the second consecutive session. Remember, OFS is underway, which was open for non-retail shareholders yesterday, and it will be open for retail shareholders today. And now the board has decided to cancel the green shoe option, which means they will be selling 7% stake, and they will not go ahead with additional 2% stake. And that is the reason Patanjali Foods will be in focus for the second consecutive session today. Moving on to Sun Pharma Advanced Research, or SPARC as we all know it, and that is because on account of US FDA action, where they have received 0 observations from US FDA from inspection of its API manufacturing facility. Moving on to Ahluwalia Contracts, then order win has come in, because of which this counter will be in focus. The board informed the exchanges that they've won orders worth about 199 crores from Indian Financial Technology. GMR Power again on the back of order win, where its arm has received order for 76 lakh smart meters from UP Discoms. Now this order is for about 10 years, so a big order and a big tenure is why this counter will also be in focus today. Moving on to JBM Auto, this one yet again on the back of order wins, where the company said that they've won orders worth about 5,000 electric buses from various state governments across the country. RVNL has received 808 infra project in the state of Odisha. Tata Metallics will also be in focus on the back of results. Sequentially weak set of numbers on account of slower exports and slower global demand. Tata Communications meanwhile will also be in focus, and that is because board of directors are scheduled to meet on the 19th of July to consider fundraising plans. On account of these fundraising plans that have come through, Tata Communications will also be in focus.
All right then, Ashesha, thank you so much for that. We will be keeping all the stocks in focus, but the other company that will be in focus today is Senco Gold, as it is set to list on the bourses. Now, my colleague Vinny is joining with all the details. Vinny, the grey market price looks pretty good. It's bound to list on a premium, but take us through all the details of the IPO.
So, yes, going to be making its debut and going to be shining on its debut is what is expected for Senco Gold. Now, issue price that was there is at 317 rupees. At that issue price, we're expecting, if it lists at that much, we expect a market cap of around 2,416 crore rupees. But obviously, we're expecting it to list at a premium. And obviously, do not forget the subscription that we got was 77 times oversubscribed. 77 27 times was the subscription, total subscription that came in. So yes, it's going to be interesting to see the listing overall. And let's not forget, Senco Gold is a jewelry company, a jewelry retailer, which is mainly based in the east of India as well. Revenue trends, how is that looking like? You know, they have seen a strong growth coming in over the last few years as well. When you look at it, FY21, the revenue was at around 2,600 crores. In FY23, they managed a revenue of 4,077 crores. So almost, 1.5 times or doubling, you could say, in terms of the revenues for the company. Other than that, profits also have seen a marked improvement, almost doubling over there in the last 3 years. And other than that, in terms of most of their breakup that comes in terms of the revenue split region wise, when you look at it, that is coming in from West Bengal is the main region, and other than that 12% comes from east and northeast India as well, and the rest of the India, it's around 15%. So mainly the main region is West Bengal as well as east and northeast India as well. And if the company lists at a premium of around 20%, we could expect a market cap of 2,899 crores. 70% premium, that would be at around 4,107 crores would be the market cap of the company, and that would mean a share price of 538 crores. So surely premium listing is what we're expecting for Senco. Valuations seem to be a bit more attractive compared to the other jewelry retailers. So keeping an eye out on Senco Gold.
All right, Vinny, thanks for all those details. We're expecting a premium listing for Senco today. But moving on then, Federal Bank reported its Q1 results yesterday, and a rather lackluster set with asset quality deterioration and profit came in below street estimates. Now, based on this, a slew of brokerages have shared their view on where they see this stock headed. Let's go across to my colleague Vamakshi, who's standing by with all those details. Vamakshi?
Well, yes, let's look at Federal Bank's brokerages. Let's look at what is the rating that has come in. Bank of America as well as Citi have maintained a buy rating on Federal Bank, while JP Morgan has maintained an overweight rating. Morgan Stanley is maintaining an equal weight call, while Investec is maintaining a hold call. Now, let's look at what the commentary of the brokerages is largely suggesting. Let's first look at the NIM commentary. Now, JP Morgan is highlighting that higher deposit rates are driving pressure as far as the NIMS is concerned. NIMS is near the trough, but recovery is expected to be gradual. In fact, Investec is estimating the NIMS to be in the range of 3.15% to 3.25%, marginally lower than what the management had guided for. As far as the loan growth is concerned, a strong credit growth was seen across segments. Even the mix has seen an improvement. As far as asset quality is concerned, JP Morgan has highlighted that asset quality was quite stable. Morgan Stanley believes that the asset quality remains quite comfortable, though retail showed higher slippages from reconstructed loans. Other than that, when we talk about the valuation, the stock does not look expensive at 0.9 times FY24 book value, and in fact the valuations are supportive when you compare it to the other mid-cap peers. So all in all, that's the view coming in from brokerages as far as Federal Bank is concerned.
All right, Vamakshi, thank you so much for that. We will be keeping an eye out on all of the stocks that you mentioned. Moving on, the spacecraft is locked and loaded, and in just a few hours from now, Chandrayaan-3 will take off from Satish Dhawan Space Center in Sriharikota. The spacecraft is scheduled to take off at 2:35 p.m. But what are the key players that are part of this crucial mission? My colleague Sharath tells us more details. Take it away, Sharath.
Well, yes, Chandrayaan-3's launch is there today, and this will be for the soft landing on the moon, and already 3 countries have already taken, and this will be a matter of pride when India comes into this list. Of course, we have US, China and the Soviet over here in the list. Apart from this, also the rover will be exploring the lunar surface, but the important thing is which are the important stocks which should be in focus, how they have put their components in this successful mission. It's expected to happen. Now, of course, the Indian Space Association members, these are the listed names, includes L&T, MapMy India, Nelco, Bharti Airtel, and also in the small cap space, we have Walchand Nagar Industries. And if you look at the important component supplier, L&T is one of the largest component suppliers when it comes for this Chandrayaan-3 mission, and they have almost 5 decades of partnership with ISRO, and that is very important. And this ranges from manufacturing subsystems still the mission tracking. So L&T would be, of course, focused in the day's trade. Apart from that, mid cap and small cap names are also there, such as MTA Tech, which we are manufacturing core parts of the second Chandrayaan-2 launch mission, and also they had core pumps going ahead. Now in the small cap space, we have Centrum Electronics, where they roughly make 300 to 500 components for the ISRO, and that is something which is a very important component they deliver. Now, speaking of deliveries, HAL will also be in focus because they deliver mechanical structure products and the equipment panels, which they had done it earlier in the previous missions. Apart from this, we also have Sundaram Fasteners coming into this list, and they supplied and manufactured fasteners for the previous Chandrayaan launch as well. Now, most of this research we have compiled from industry reports and also ICICI Direct.
Well, and PM Modi is on a two-day tour to France. His visit is set to provide a big boost for bilateral ties between India and France. PM Modi hailed 25 years of Indo-France strategic partnership, detailing how the two nations work together on regional as well as global issues. The big highlight of PM's France visit, however, is the key defense deals on fighter jets and submarines. And in his address to the Indian community last night, he reiterated that India is all set for the G20 presidency. He also highlighted India's rising power at global stage. Let's listen into what he had to say.
साथियों, आज दुनिया नए वर्ल्ड ऑर्डर की तरफ बढ़ रही है। भारत का सामर्थ्य और भारत की भूमिका बहुत तेजी से बदल रही है। भारत इस समय G20 का प्रेसिडेंट है। पहली बार किसी देश की प्रेसिडेंसी में ऐसा हो रहा है जब उस देश के कोने कोने में 200 से ज्यादा बैठकें हो रही है। पूरा G20 समूह भारत के सामर्थ्य को देख रहा है, उससे मंत्रमुग्ध है। क्लाइमेट चेंज हो, ग्लोबल सप्लाई चेन हो, आतंकवाद हो, कट्टरवाद हो, हर चुनौती से निपटने में भारत का अनुभव, भारत का प्रयास दुनिया के लिए मददगार साबित हो रहा है।
And well, moving on, then back home, Pankaj Tibrewal, who is the Senior VP and Fund Manager of Equity Kotak Mutual Fund, is seeing early signs of recovery for this pharma space and believes that the valuations for this sector have also corrected well. Now, where does he see the pharma space headed from here on? Let's listen into what he had to say.
Probably where we are seeing early signs of recovery is pharma. And on valuation basis, also, the sector has gone through a 5-year underperformance, and valuations have corrected meaningfully out there. Our sense is that when we look at the March quarter results, this was the first quarter after many quarters that the US generic revenue for most of the companies were either flat or marginal increase. So the price erosion, which we have seen for last 2.5 years, seems to be coming under control, maybe in mid-single digits, which was high single digit or double digit, and that bodes well for US generic growth. Indian market, any which ways, continues to do well for most of the pharma companies. So pharma could be a decent play from a medium to long term, and valuations in our favor. Even after the high growth last year, we believe that a large part of corporate India growth this year also will be driven by banking and financial services. Our bias is there towards private sector banks and some select NBFCs. What we believe this year would happen is that BFSI's growth would taper down, but it still will be a decent growth to talk about. And on the other side, the non-BFSI space will see margin expansion So this year it will be lower top line growth because WPI is already moved into negative territory. So you won't get the advantage of inflation with you as a producer. But on the other side, commodities have cooled off meaningfully and they would aid to margins.
All right, so that's the word coming in from Pankaj Shibrewal on pharma as well as the banking and financial space. But with that, we're completely timed out on this edition of Market Cafe, but don't go anywhere as the market takes all the action ahead.